Hello, everyone, and welcome to the annual podcast. Now, this is our annual Christmas podcast, first ever. So, maybe we'll do this again next year. It
Right?
has it has been a few weeks. We had to take a few weeks off. Super busy schedule for everybody traveling. We got all sorts of stuff, including the workshop that we pushed out. My entire team was just absolutely floored, busy with all of that because we had a great turnout on that. But for today's podcast, glad to be back with you, and we are going to talk a little bit about the market, obviously, because that's what we do. We talk about the markets, and we're going to talk about the seasonal aspect of the market. We got Christmas coming up. We got, as Ben was mentioning pre-podcast, uh, the second year of a presidential term is kind of lackluster compared to other years. Is that what you heard there, Ben?
Yeah, so it's an interesting statistic for those of you that don't know. Year one in a presidency can be quite volatile, but positive overall. But year two is interesting because year two tends to have negative years. Does that mean we're going to get a negative year? No, but I'm pretty I'm pretty much on the bearish side here, at least net
Oh,
neutral bearish
oh,
for the
we've got
next
a
year.
year
I'm
call.
calling it right here.
He's
I'm
calling
calling
it
it right
right
here.
here.
And in fact, if we were right, well.
We
The
were.
last time we did this, right? What was it, October? We were
October.
calling? Right. We nailed it, sort of. We nailed it enough, Ryan and I.
We did. We did. I'm going to give
But
us credit.
yeah, I don't want to pat us on the back too much. But I think
Oh,
for 2026, I think we got a lot of headwinds. We've got tremendous gains over the last 2 years in the market, and I think with everything lining up the way it is, especially with that silly statistic of it being a negative year, possibly, I just think it's kind of ready for a bit of a pullback here.
Interesting. Interesting. So we've got a bit of so are you like in January or now? Pull back now. I mean, we're pulling
You
back the
know,
last few days.
with
Uh,
Christmas and they like to do the Santa Claus rally or the New Year's rally or whatever people want to call it. Um, I wouldn't short now, no, but I would definitely see if there's any kind of reaction, which tends to happen often in the beginning of January. If we get any kind of buying into these highs again into January and February, yeah, I would definitely look at shorting the market around there.
well, what's a
so
typical January?
well, hang on. What is, if anybody knows, what is the most bearish day of the year typically in stocks?
January 14th.
The most
I
bearish
want to
Oh,
say
day.
I actually want to say January. I actually think isn't it New Year's? Isn't it? I believe I know this. I think it's in beginning of January. I could be wrong though.
it's the
See,
first trading day of the year.
Yeah. Okay.
what,
You're
the
you're what?
second?
If
My
if the first trading day
my
is.
my guess wasn't that far off, as
No,
Right.
random as
January
it was.
14th was a very good guess. Why did you pick January 14th?
It's your jam session. It was the date on
Oh,
my
my
mind.
jam, my jam session. Way to segue into our next promo.
You're welcome.
I notice Chad here is not really committing on anything here.
Chad, what's on
Uh,
your mind, buddy?
I'm just listening. There's a phrase that I guess kind of came to mind. "'Tis better to be quiet and be thoughtful,
oh no,
to speak up and be known to be a fool."
wait a second, Chad.
Yes.
All four of us are on this podcast for a reason. We're
You
all
gotta pull your
fools
weight,
here,
boy.
baby.
Speak for
Yes.
yourself.
We're all full. By being on this podcast, you've already outed
You've
yourself as a fool.
doomed
So,
yourself.
I know. Amen to that. Amen to that.
so might as well just open your mouth and confirm it to everybody.
You
Um,
know, yeah, go, Chad.
we were talking about something earlier, and Ben brought up a good point too, but it'd be interesting to get anyone's opinion on this as well. Need to go in and study and research it, but and I mentioned earlier before we run recording is as January goes, so does the year go.
Mm.
But is there an asterisk by that with the presidential, cycle with the midterms? My mind is blanking out on that. Um,
So you came into the podcast
yeah.
unprepared.
Yes. Yes. hmm Yep.
Well,
Well, I
yeah,
mean,
I actually have heard that
yeah.
as January goes, I have not like done any kind of research to confirm it. But wait till y'all hear my prediction.
Yeah. So, I've been looking into this and I think for 2026, I do one of my, I guess, interests or things that I do is I do research and, reading and breaking down kind of maybe how institutions might think. So it might potentially give me a sentiment on tailwinds of what we might look at. But you're talking about like a year of execution. And, as we enter 2026, and when you talk about bracing for a year of execution, if people aren't familiar with that, it kind of refers to the market's shift in focus. So after years of volatility, rate hikes and speculative narratives, maybe 2026, they're thinking is going to be, you know, like framed for a period where investors will reward companies that actually can deliver, on earnings and margin,
Mm.
and infrastructure projects and operational efficiency. So, from an infrastructure project standpoint, there's a lot of these institutions that are looking at government spending and some infrastructure-driven demand in companies that they feel that might flourish in the new year coming into that.
So you're looking at like a sector
Yeah,
division
exactly.
here. Okay.
Exactly.
Okay.
And speaking of, I'm actually writing about that in the seasonal newsletter that we do
Mm.
every week. So it'll be in there, and people that are listening, be sure to pay attention to that when you get it in your emails.
Yeah, you did a nice little January seasonal paper last week, right?
I think so. I think it was well
Yeah.
received. That's
Yeah. No,
been the
it's no.
feedback.
It
What I'm
looked
trying.
good. It looked good.
Thank you. Well, yeah, what we're trying to do for everybody listening is try to attempt to give a thesis or a reason behind the why. So when we talk about things that Ben's mentioned with the presidential cycle, certain months or periods, seasonality per se, it we're trying to discover why
Hmm.
it might make sense and build a thesis or a foundation
All right.
with that versus just finding a date. So we're going to start putting that in the newsletter to just help people out.
So what I gathered from Chad's prediction here is he has no clue which direction the market's going to go next year. Uh,
10%, 10% correction. That's what we're gonna hit. That's what's
and
gonna happen.
Ben thinks there's going to be a
yeah,
10% correction. You think it's going to happen in January?
No, no. The
No.
overall, that's where I remove myself from the predictive model is when it's gonna happen. I
yep.
prepare for the move within typically a quarter to 2 quarters. So I'm looking at I see 2026 at some point hitting a 10% correction before we'll say June. We'll call it Q2.
Okay. Okay.
Yeah.
Spring's on mute.
Yep, yep, she
Jesus.
is. We're reading lips.
I'm muted. I'm so sorry. I had so much to say.
I was wondering why you're so quiet. I'm like,
Here, let me mute you again.
Hey. Okay, so I have a question. Since we operate on data, what if you think it's gonna retrace in June?
by
What
June.
would by June? What about January? Because we were talking about the phrase, as January goes, so goes the year. And I looked up the statistic for it.
Oh, what
Oh,
are?
there we go. Here we
Oh,
go.
here we go.
So, historically, this phenomenon has been accurate 75% of the time.
Hmm.
Okay.
So that's a little data point for you to make your
So
decision.
how often? Because here's the long-term stat. So that the
Okay.
market's up 70% of the years, period,
Right.
regardless of anything, right?
Yeah,
So
I did. Gotcha.
so the question is, if it's 75%, is that just as much right when January's down?
January has led to lower market performance about 60% of the time. Also
Hmm.
within that stat.
January
So
down.
Now,
it's just
is that month close,
Heck if
right?
I know.
So
so
is
it's
it
actually more accurate if January's up because that means that there's like 80% of the years that are up when January's up, and 70% overall, and 60% of the years that are down when January's down. Okay,
Right.
Mm.
all right. Well, that's interesting. All of this put together is interesting because I haven't done it yet, and I may not do it. I don't know. I was going to do a 2026 outlook,
Yeah.
and I'm still putting the pieces together, so I want to be real careful about what I say here. But I'm expecting a crash in 2026.
Oh, that's a bad prediction. Bad.
Ryan?
I'm
I
seeing
always
some numbers.
look. Here's the deal. I knew
I'm
Ryan
seeing
had a
some
brain,
numbers.
but sometimes Ryan's genius just comes out.
Well, what kind of crash? Like a full crash?
Like a 30% crash.
There we go.
Oh,
There
that's
we go.
scary.
Yeah.
There we
And
go. And
and
my
I've been
10%?
I've been
Boom.
bullish. I have been
Yeah.
bullish,
I agree.
and part of me is still bullish. Like,
Mhm.
Absolutely.
I almost don't want to believe what I'm seeing in the numbers.
Right.
And
What are you
and
seeing in
and
the numbers? What
I
makes you
don't
think that?
there's just some so I'm not a huge fundamental guy, right? But all the fundamentals can be uh condensed down to statistics, right?
Right.
When this number gets so high, then the market gets wobbly. When this number gets so low, then the market starts to come up, and you have stats that are associated with it. The question is whether there's correlation between them. And in doing my research, we are looking like 2008
Mm.
Yes.
right now,
Yes. And
and
you,
in a lot of ways. And
yeah.
and I didn't realize how close we were until I started looking at these things. So, uh, the problem is that like what's the guy's name that was doing all the credit swaps,
Big short guy.
shorten the credit swaps?
Right.
Yeah, the big short guy. He was wrong. He knew it was coming,
Right.
but it
Right.
took so long to happen. So I'm a
hmm
little hesitant to say
hmm
2026, but I do think I
Right.
think it's definitely possible in 2026. And if it's not 2026, I know. So Ben, you were also saying that the third year of the president is like massively bullish.
Yeah, and that's what's really odd about this whole scenario. In fact, I just looked at January this year, and that interesting. January was actually positive this year. It was
Okay.
February and March that were. I thought January was negative this year, ironically enough.
Hmm.
So that kind of feeds into that statistic of January, what have you. But what's interesting about year three of a presidency, it is by far the strongest.
Interesting.
Yeah,
Okay.
It's not even close. It's not like, oh, it's ahead by 10%. No, it's like double the returns generally versus the other 3 years.
yeah.
What
Um,
year was
so
2008 of a presidency?
uh, would that be your is that year
That
one?
that would have been the end of Bush's.
Yeah,
So yeah, that would have been year 4 of Bush, I believe.
year
Mhm.
four, and that year tends to be very volatile. So yes.
Yeah,
Um,
that's the election year. That's when
Yeah.
Obama was
right.
elected.
So for me, I would push my chips in on 2026. I still think there's a lot of positivity. There's a ton of money in the markets that are bullish, and it's really, I mean, how you could sell against that, but it's tough to fight the
Yeah,
headwinds. It really is, and you're going to lose more if you do that too long.
yeah, yeah. So
Um,
there it is. I may put some flesh around those bones.
Literal
Talk
bones.
talk a little bit about talk a little bit about the exact numbers that I'm looking at and the stats that
Mm.
I'm looking at and the this or that. I don't know. You know, for me it just doesn't matter, right? Because
right.
market's down what about almost 2%, which by the way, if you were involved in my live trade calls, I called every bit of that one. Uh so I've been right twice this year. and that's about it.
Hey, 100%. Batting 100%.
No, no, definitely not batting
It's a
100%
broke.
because
He's a broken clock.
I was expecting the retracement in June. When it didn't come in June, I was expecting it in July, and when it didn't come in July, I'm definitely expecting it in August. And it didn't come in August, and I'm sitting here, I'm just beside myself. But when you take a look at the underpinnings of this, it was just a few. Most stocks didn't participate from July to now. Most stocks did not participate, which is really telling.
That was really interesting. And when that happens, you got to wonder what's going
Which
on in the
is
background.
which is part of the issue here with where it's not really the move that everybody thinks it is.
Mhm.
So, but we got Christmas coming up. By the way, first trading day of the year is the most bearish day of the year. So I'll be putting on some bearish spreads to take advantage of that, probably right after Christmas. And the first week of December is the most bullish week of the year from a probability standpoint. Not necessarily the move, but it is pretty strong on a move.
Mhm.
In fact, there's some stats, and I forget exactly the dates, but between two dates, SPY has moved up 100% of the time since it came on the board in the within the first week of December. And I keep saying, okay, this is the year it's not going to happen. This is the year, and it happened again this year. So there it is, and now we've got a Christmas rally. But after the first week of December, there's almost always a little bit of a pullback, which is exactly the way it happened again this year.
Mhm.
And then we might come up back to where we were in the Christmas rally. It's really not a Christmas rally. It's just kind of taking back what was given back the second or third week of December,
Mhm.
and then popping up. But really, what happens the last day of the year? That's going to be the last week. If people are buying and buying and buying for the tax stuff, that's one thing. If they're not, that's a bit concerning. So it'll be interesting to see what happens the last week, and then the first calendar day, and then as January pushes out. I don't think the crash is coming in January. I think we're too close.
No, correct. I agree.
I think it's coming over the summer.
Although any of my Tao listeners out there, I was actually going to have us go short. I was actually going to short this rally this morning into the new year. And we may still hop into something.
Yeah.
We've actually been running a heck of a streak here.
Yep.
Oh, do
Closed
tell.
out. We have been right since September, Ryan. We have closed out combos since September 25th till now. We closed one in December. We've pulled out a gain every single time. I just wish they always happened that way, but
What's your
uh,
average?
let's see, $172, 204, and this is per lot. 42, 92, 175, 80, and 125.
Yeah, and these are all on the smaller indexes. This is not SPX, right? This is Qs
Correct.
or
And just
yeah,
strictly on the Qs, actually.
yeah.
We've been on the
Okay,
Qs
strictly on the
quite a
Qs.
bit.
Yeah, yeah.
Nice.
Um, so yeah, it's one of those things where do I want to break that streak and do something that's more directional because we put on combos, but pricing right now has been a little odd actually
It
with
is very odd right now.
yeah. So
In
I want
fact, if you saw the market take a dive the last 3 days, so down Monday, down Tuesday, down Wednesday, and usually when there's another seasonal thing, which by the way, we should stick a link in the Super Seasonal because we have the special where they can get lifetime access to Super Seasonals.
hmm,
Absolutely, just a tremendous tool to have in front of you for all stocks.
hmm,
But down Monday, down Tuesday, down Wednesday, Thursday is a very strong bullish day in that scenario, irregardless of everything else. And we saw that today, but it's still higher because we had a big down day yesterday, so it opened up. So we're still up like 4 points today, but it's come off the highs significantly as well. So it's definitely an interesting scenario. But
I think a
I
lot of that though had to do with the I think they released CPI data that
Yeah,
was delayed.
There's a
that's
lot of
right.
stuff that came out this morning.
I didn't look at. Did you happen to look at what that was by chance?
I did not. I don't pay attention to that stuff
I was
usually.
curious if it came back as anything that was positive, or if they're just literally buying into the hype of
Like
oh, inflation's lower.
I don't think it much matters unless it's, really obvious difference than what was expected. If it's pretty close to what's expected, it's already worked in the market. And
Yep.
so I don't know
That's
what's
true.
so I don't really try and interpret that stuff after it comes out. The market interprets it exactly as it should. It's kind of the way that I see it.
Um,
So I'd be careful about going directional, but hey, it's your service and you're doing a heck of a job.
It would.
People,
I would tell anyone if we do take a bearish trade, it would be a very small trade. We'd risk no more than $100 per lot
yeah, yeah,
on that. We would
um,
definitely not be going heavy on that.
yeah,
Maybe do
So
a
yeah,
double trade that week.
yeah.
So
but
one thing too
yeah.
that I'd maybe add about Ben's point on the presidential cycle. I was reading about this, and it jogged my memory. It's like so as we enter year two, the midterm, the presidential cycle. The thesis or the history says to expect volatility to increase by midsummer. So historically, the best way to navigate a midterm year is to be aggressive in Q1 and defensive by Q3. So,
Hmm.
um, in summary, midterms tend to start strong but get choppy by summer. So investors might want to lean into growth early Q1, maybe, and shift defensive
Hmm.
by Q3 to ride out the volatility. That's what history says.
I wonder if
So,
that has anything to do with the second year presidential term, midterms.
Right.
Yeah. Hmm.
Right. It's
yeah,
an interesting
Very.
statistic. Yeah.
Yeah. Yeah.
yeah.
Yeah. Yeah. That jogged my memory. What I was going to say about the 3 days down here. Over the last couple of drops that we've seen, the
Hmm.
one in October, the one late November, right before Thanksgiving, then it came back right back up. VIX spiked all three of those instances, and with this last move down, no spike,
Hmm.
which I
Hmm.
thought was interesting. And in
Mhm.
fact, right now, we're down, almost 2% over the 3-4 days,
Yeah.
and VIX has barely moved the needle. So I don't know what to say about that one, except maybe, the Christmas rally is coming and everybody knows it, except
Right.
us.
Right.
So we'll see.
Yeah.
But so you're thinking about taking a bearish trade.
Not a large one. If we took a bearish trade, which we're not, honestly, I wanted to take the trade in the morning. And as you can see,
Yeah,
the market's down. So
yeah,
I mean, honestly, our entry window is gone.
yeah.
However, if we do on Friday revisit, around actually, let me pull up the Qs. Hold on, because I have SPX up. If we revisit around today's highs, and this will be entered most likely towards the close. So if we don't close above today's high, then yeah, I would have us throw one on. I'm fairly confident on it. It wouldn't be a long trade. It would definitely be something that we would go because honestly, if we revisit 600 again and that holds, I would actually be bullish at that point for at least the first part of the year.
Yeah.
Not the bearish day.
Actually, yeah, it kind of extends to the rest of the week, but on a smaller scale.
Right.
Yeah, I'm
Um,
I'm I'm a buyer in the middle or end of the first week of January.
yep. So it
Absolutely.
would be a quick trade. It would be something that
Yeah,
see right now we're trading at 608 on the Qs. It would be a revisit around 600. But I would prefer to short this around 613, 614
yeah.
to do it. But
So
yeah,
you know what I do in that situation
what's that?
is I will put on a neutral trade
Hmm.
at a credit so
Okay.
that, if I'm a little wrong, I still make money. If I'm right, I make money. And the market can still go up and I still make a little bit of money. My risk isn't unless I'm really wrong. And one of the simplest ones is like the governor, which is
Mhm.
a strategy that is just simple. It's a simple diagonal spread based on a certain structure, a certain risk level. It's one that I give, by the way, in the workshop. So, uh, yes, there you go. If you did not attend the workshop, you attended the workshop, right, Ben?
Yeah, it was. Yeah, the beginning of it, and then I got busy. I got busy. I ain't gonna lie to you.
I
We got
attended all of
Tao.
it.
Yeah, we got Tao
Oh,
going. I will tell you, man, you are a trooper. I don't know how you talk for a whole day, man. I don't know how you do
I
it.
could talk about this stuff for weeks if my voice would hold out.
Uh,
Yeah, don't belittle the work it takes.
but
That's
Oh,
wild.
it's I know it was, it was a crazy day. Um, but I thought it was a pretty good success. We had really good feedback.
Yep.
Yeah.
really good feedback.
Yeah.
We thank all of you for that. Appreciate it.
Yep.
But the feedback was excellent,
Yep.
and yeah, it was definitely a good event.
Yeah. And so every trade that would fit your, bearish, we took 8 trades that day that we were filled on.
Mm,
6 of them kind of met this, only some of them you could actually be right. I mean, the market could actually move up 1% and you're still going to make your money, right?
right.
But the risk was to the upside eventually.
Mm.
And obviously, all 6 of those, tremendous profits over the last couple of days. Actually, last Friday, I say we were filled on 8 trades. I closed out last Friday 20 trades.
On Friday alone?
Friday alone.
Oh
Were
wow.
they all winners?
It was no, but net was a very good week.
There you go.
Nice.
That's all
Very
that
good week.
matters. That is all
Because
that
That's
matters.
some of them were synthetic long positions that I rolled. And so they closed out and then I roll it, but I look at that as a closed trade. And so a couple of those were losses. One of them was like $1,000, but I should show these sometime. Maybe on the next podcast. But yeah, most of that is from strategies that I had in the workshop. Most of those trades were based on strategies that I revealed in the workshop. So,
nice.
if you haven't gone through the workshop, the link should be in the video or below the video, right, Spring? Is that where it
In the
is?
description.
In
Yes,
the
sir.
description to sign up for the workshop. Now, there's one thing that I do cover in the workshop that and I think I told you, Spring, on the next workshop we need to include it for our VIP members, the compounding. Did I not tell you that? I think we need to include the compounding course
Fixed ratio. Money management.
in the next VIP group.
Cool.
Um, just simply because I'm looking at compounding every single strategy
Yeah.
at different rates based on different parameters. And I'm giving 12 strategies in a day. It's hard enough to cover the strategies, much less the compounding uh, principles, compounding, what's the word I'm looking for? Help me out here.
Process.
No,
Guidelines.
Talking about when to
Underlying.
increase and decrease, or
Up, down.
we'll just call it strategy. Let's do that. Parameters,
Principles was the right the right
Campaign.
strategy
word.
parameters.
Campaign. Your compounding campaign, much like you do a military
Yes.
campaign.
Yeah.
Compounding.
So I'm trying to reveal and explain 12 strategies in one day and how to compound those strategies. And it just, it's a lot of it's an information packed session.
yeah.
And
Well, when
if
you're
you
compounding,
Mhm.
is it different for each strategy?
It is, but it's the same math
Yeah.
formula that you
It
apply with just
it
different parameters.
would Ryan, would you say it's a function of the risk and each strategy carries a different risk, so the math is going to be different per strategy?
Yes, every single compound, the variables are going to be different. Math is the same. The calculation is the same. It's the same formula, in other words.
Right.
You just poke in variables into that formula. But any compounding plan that is not adequately and accurately taking into account the risk of that strategy should be avoided at all costs, which
Mhm.
is more than you think. Um, and so, yes, it is. So if strategy A has a risk of and when I say risk, I don't mean single trade, I mean drawdown. You're trading, you're trading, you're trading, you're trading. What's the peak to valley expectation of that
Right.
in a worst case scenario, which is hard to know, right? Because if it got down, so let's say you did a back test and it was $10,000 on some, technical analysis strategy or whatever, and it was $10,000 in the past, it can be that again, and obviously it can go beyond that. So the question is okay, what's the max expected drawdown, and then how often or how easily would it be to experience that drawdown? That's also going to come into play. Because what I don't want to do is I don't want to create a compounding approach and apply it based on something that may happen once every 5 years, right? So instead, I want to say, okay, what's most likely not going to happen this year? And then I'll use that number because it's already a conservative compounding plan in and of itself, just by the very basis of how it was developed. It is conservative, but the numbers are dramatically different. If I say, okay, I'm expecting a $10,000 drawdown, therefore I'm going to use X, and the variable we call it is the delta. It just means change, and so that's the variable in our formula. And so if a drawdown is 10,000, I'm going to use the variable X delta of 5,000, plug that $5,000 into the formula, and then I'm going to know, where each of my increases are or decreases for that matter. And the problem is that if $10,000 never happens, let's say I had trade this thing for 5 years and $10,000 never happens, I was way too conservative with the compounding at that point. And if I would have, let's say the maximum drawdown was only 6,000, and it almost never happens this way, by the way. It's almost exactly the opposite. We think 10,000, it goes to 16. It's kind of actually what happens more often than not. But if it's only 6,000, if I would have done the $3,000 and plugged that into it, we're talking about doubling the account based on being a little bit more aggressive on the compounding. So you really have to your point, you really have to dig in on this risk thing. And I try and convey that, as we're going, and I like it from the standpoint of what we're doing with option spreads because they're statistical. And the probability is that we're going to win 70% of the time. When we win, the average win is going to be, $700, and when we lose, the average loss is going to be 1,000. Those are numbers that you can rely on for your compounding, right? Technical analysis backtest, I would be the opposite. I would be a little bit more conservative until I have more
Mhm.
of a history. And if I feel like at that point, based on my actual performance compared to the backtest, if it's fairly accurate, if it's fairly close, then I'll say, okay, I can probably trust this number to be kind of a worst case scenario. And if it does happen, the compounding has already taken that into account. The compounding formula has already taken that into account. So I'm not worried about it happening. And this is a great thing about compounding. Once it exceeds that drawdown, you're shedding those trade size. So if it continues and it continues and it continues, you're shedding that trade size. And it would take, so if you have a year of profitable trades and then the drawdown happens and it keeps happening and it keeps happening and the strategy completely stops working for whatever reason. The compound has you protecting your capital. The compounding formula has you protecting your capital. It would have to be such a massive drawdown, unbelievable drawdown to wipe an account out once you've reached a certain level, as long as you're following the instructions of the formula. So it's I know I went on a rant. This is how I can talk all day on this stuff.
Yeah.
You just get me going.
Um,
But it's so important. Uh,
yeah.
So yeah,
Uh,
risk is definitely a piece of that puzzle. And for each strategy has a different risk, has different statistics, have different probabilities, and we take that into account. And this is a topic. It's not hard, and it makes a lot of sense. It's just a matter of, understanding it and that course that I'm talking about. And I guess we should put that course in there too. Uh, 12 hours is what I spend on teaching the compounding aspect of it. But I go in all sorts of things. I give you an understanding,
hmm.
asymmetrical leverage, what to do if you have multiple strategies, and you're combining them. What's the correlation? How to be more aggressive, how to be more conservative, how to protect capital or emphasize protecting capital, past a certain drawdown, how to emphasize, maximum growth, which scares some people. But quite frankly, what I ask everybody is, yeah, they say, if I start trading it, I could be at 20 contracts, right? If I'm trading option spreads, I could be at 20 option spreads like by the end of the year. And if I take a loss there, I could be losing $25,000 on one trade, right? And they're like, yeah, so that's pretty big in their eyes because they've never been there. But I always ask people, would you rather lose 25,000 of a $200,000 account or 5,000 of a $25,000 account?
Obviously, the latter.
I mean, where are you going to end up at, right? You lose 25,000, $200,000, you got $175,000. If that freaked you out, go back down to one.
Yeah.
Start over again,
Yeah,
right?
actually, yeah, it's funny you mention that because that's what I've told a lot of our members that ask that same question. Like, what are you just going to do this to infinity? And if you can, great, but
Yeah, you can't.
honestly, there
Well,
your nerves, your there's a lot of emotions that come on if you're actually successful in compounding an account. And I tell them that just pocket the money, start from scratch, or at least take half.
Yeah.
Yeah,
And
yeah,
reduce your trade size, and then, or honestly, just have a much more conservative compounding schedule. Or you could also switch between the two because obviously you have the fixed ratio method, and then there's a fixed fractional method, and at times fixed fractional makes sense.
yeah,
But you know,
yeah.
it just kind of depends on the person's, I guess, emotional stability when it comes to placing the trades at that point.
Yeah,
what Yeah, I was going to say that I'm not sure really who's listening today, where they are in their level of trading, but what I've found is that a lot of traders that are newer or even some experience, they don't really understand money management properly, and they've just never been taught. And I will say, I used to go out and do seminars face to face all over the country and throughout the world with a lot of different, retail, just normal folks like you all and me and whatever. And what was interesting, started to do these seminars, and people didn't have a clue about money management, proper position sizing, when to increase, when to decrease, and why. And it is so important and it's so boring. Nobody talks about it. I mean, not to me, not to Ryan or Spring or Ben or whatever, but maybe it is boring to you guys. But
no, it is
I think it's
boring.
maybe not.
fascinating,
But
honestly.
It is
yeah, and
fascinating. It is
so
boring.
it's it's just all I would stress is that it maybe is the key to everything.
Oh, it drives everything. Once you understand the power of compounding in the world that we're in, we're not talking about compounding interest, which is powerful. We're talking about compounding on a whole other level
Right.
that is geometric. And once you realize that, you're like, oh, that's what I should be focusing on, and that's going to drive my decisions in what I trade, actually. It's driven my decision in what I've pursued in trading, which is why I don't really focus on technical analysis almost on anything ever anymore. And I did a 12-hour course on technical analysis back in the day. So it drives how you think about trading. It drives what you consider trading. It drives everything. But you hit on a point, Chad, that It's not taught in the industry. It's not really discussed in the industry. And do you know why?
I I can take a guess, but why is it?
You actually said it. There's no sex appeal.
Yeah.
It's not exciting, which
It doesn't get TikTok clicks
it
or
doesn't get TikTok clicks. It doesn't get, it doesn't make for great what's kind of marketing? Hyped up marketing,
Viral,
country
viral
club
hit.
viral,
conversation. I don't
but
know.
that's
Well, here's a
Whatever.
viral
exactly
tip. Boom.
for any hyped up strategy that somebody might be promoting. Uh on a reality basis, because it's math, compounding deserves 10 times the hype. And
Amen.
it's not hype,
It doesn't make sense that
right?
it's not hype to me
So
because it
yeah.
totally hypes me up.
So somebody says, well, it's boring and there's no sex appeal, it's not sexy, not exciting, right? And I'm like, turning $5,000 into $107,000 in 68 days is not exciting to you? Because it's exciting to me. So
I
yeah,
wonder too, guys and gal, um, if people from what Ryan's going to teach you or has taught you, since we're discussing this, and he brought it to light to me, is I don't think people realize how little you need to make potentially
yeah,
Yeah,
to
yeah,
grow it into a very nice size account over the months and years.
yeah.
you're
Like
If you
talking
Ben,
stick
averages.
with it.
Well,
Ben,
netting. Yeah.
What's that,
Yeah,
Ben?
Ben's
Well,
netting.
netting what you
the
net, and
net,
that's
yeah, the
Right
net,
now.
not
After
set, right,
commissions and spreads
right.
and
And
oops and screw ups.
that's exactly my point on it dictates what you decide to trade. Ben's trade of the week, you're not going to hit home runs,
no.
No.
right? It's going to be first bases, doubles, and occasionally a triple type deal.
Yeah.
But I mean, he was giving the averages. Spring asked what, would have been, what's been the averages.
We
And he's
actually,
like
what's really funny? We
150,
were wrong.
92. Do what?
Right. We were wrong the last uh three trades and still pulled out gains simply because of the
Right.
fact that when I had us enter into the bearish, because they're mainly bullish spreads or bullish
Yeah,
combos rather.
yeah,
And if we get that initial push, I'm taking it off.
Mhm.
That initial push will have us in roughly about 80 to $120 per lot in gains. I'm happy with that.
yeah,
If we don't get it, which we didn't the last three trades, um, oftentimes that'll push the bearish will react to it because I'll only have us get into that bearish if the credit's worth it. If it's not, then the bearish really isn't protecting us. Um, I know a lot of members were a little concerned on the last trade because I actually had us roll the bullish down one
Mhm.
time because I'll do a roll in the bush about 2 to 3 times depending on where the market is. But the second we rolled that bullish, the
Mhm.
market rebounded and moved higher, but I didn't have us put on a strongly bullish trade.
Mhm.
So we actually were in a bit of a drawdown, and we had gotten a few people saying, "Oh, should we close? Should we do this?" I was like, "No," because now you're playing that teeter-totter effect where you're going back and forth and you're trying to roll every single move, and you just have to accept where the risk is, and the risk was
yeah,
way
yeah,
north where we're at. So it would need a consistently higher move where it would threaten us going into $200-300 per lot in gains. But yeah, we held on to it obviously, and we were able to close out. The markets came back down, and but
Yeah.
I try to remind people I don't have a crystal ball. It's not about knowing. I don't really even trade direction. I just have us going where the market tends to move, which is higher. And if we're wrong, then we just play defense.
yeah. But your average gains are not they're nothing to, I mean, you're not going to like create this hype marketing campaign over these,
Nope.
583%, which
Right.
can happen with some of these spreads, but annualized returns and whatnot. But the point being is that a lot of people see the actual number, $100 here,
Yeah,
$150 there, $50 here, and they're like, that's boring.
Mhm.
especially
But
if you have a huge account. It's like, oof, that's nothing.
but then a few podcasts ago, we talked about what your trades, Ben, have compounded to.
Yep.
If you
Yeah.
versus so non-compounded versus compounded, it was like what, 5 or 7 thousand non-compounded total
Yeah.
Yeah,
net?
so
Yeah,
non-compounded the running total is right now actually as we speak around
Oh, good.
4649, so
Nice.
4649.
In
And
just a couple months, you
compounded,
brought in another 12, 13 grand since we just said
Yeah,
that.
with the
yeah.
starting
Yeah.
account.
He was at
oh,
31K, and now he's
Oh,
at 46,
47 actually. Wow, okay.
and
47.
and that
Well,
would
you know what, like, we'll just call it 46 because honestly, um, anyone ask, I'll always say, hey, when I send the trade out, sometimes you'll get a better fill than I do, and sometimes you won't.
yeah,
And there's nothing I can do about that, guy.
yeah,
So yeah, I always say, hey, you have that range in mind, but I tend not to go 5% above and below. So, if you can get a better fill, great. But if the move is already underway and you're still within about a 5% of that fill, go for it.
yeah.
Mhm,
But
So
mhm.
I want to be really clear for those listening.
Yeah.
If you had not compounded just one lot every single time,
mhm.
what are you looking at over the last year or 2 years or whatever?
$5,000 account is now 96.49.
So less than $5,000 in profit
Yeah.
has now compounded a $5,000 account into about 40 something thousand.
47 grand.
We'll call it 40 after errors and fees or what have you.
Right. And the time frame is
Being
it?
conservative, right?
Right. Heck,
So
I could even go, honestly, my number, I always say knock off a third. Just
yeah,
knock off a third of what the
yeah,
profits are, and that's realistically where you're at. That will
yeah,
include, if you're not using a discount broker like Tradier, errors, slippage, getting out, not knowing what to do. I mean, all kinds of stuff that happens.
yeah.
And
Knock
that
off
was
a
in
So
third.
a what was the time frame?
It's since 2022 is when
Okay.
2023, excuse
No,
me.
yeah, it's only been
2023.
2 years, and
So
the
two
bulk of
years.
it was this year. So it was the slow compounding the first year,
Right.
which
And
you were
then
going to
it
get
Right.
picks and
into.
then it picks up.
And then
Yep.
it picked up crazy this year.
So in 2 years, he has uh increased the return by sixfold of what it would have been had he not compounded.
Yep.
That's what you don't have to have sexy. The sexy is the compounding.
I
Yep.
did.
That's the whole point,
Yeah.
Right.
right? In fact, I want the trades that I take, I want them to be very boring.
Mhm,
Like I don't want any kind of excitement from those at all. I hate excitement from the trades themselves.
mhm.
Excitement is when you're compounding. So,
Ryan,
yeah,
Ryan, so a $5,000 account could hypothetically be worth $40,000 in the last, call it 2 years,
2 years.
which is insane. Now, Ryan, if I had $50,000 to start with, would I potentially have 400,000?
You'd have more.
Well,
Yeah, yes and no.
Okay,
That's a
because that's what people are
great
thinking. I got
question.
more than 5 grand.
It's a great question.
Hmm.
Um, and what I tell people is I don't care where they are, I don't care how much money they have in their account. If they have not traded, like if they sign up for Ben's trade of the week, if they have not traded Ben's trade of the week, they should not start with a $100,000 account and trade 20 lots. They should start with one. If they're really experienced in the type of trading that Ben is doing, then they have a 50,000 account. Maybe they start with three in order to skip the asymmetrical leverage issue, which is a whole nother. We could
Yeah,
spend another hour
another
on
topic.
asymmetrical leverage.
Yeah.
But if you start with three, that's like the prime starting spot. But most people, I just say you start with one, then as it proves itself, and you prove that you can make money with it, then you can start being a little bit more aggressive with the compounding. There's always room to be more aggressive with the compounding. So not necessarily, um, but once you get going, you can start to just really turn up the heat. It's like nitrous in a race car. I mean, it will just
Fast and
explode.
Furious.
It can absolutely explode once you start in that compounding zone. But you don't want to start with 50,000. I knew where you're going with that, Chad,
Yeah.
immediately. Great segue into that topic. But no, you do not want to start You have $5,000 account, you start with one. $50,000 account, you do not start with 10. I know a lot of people are going to be greedy. They're going to make mistakes, and then they're going to, this is what happens. By the way, I can't tell you how many times
Yeah.
this has happened.
I know where you're
After
going with this
telling
too, because
them.
this is what I know where he's going with it because this is what I tell members too. Go ahead, Ryan.
Uh, if you start off with a larger trade size and you run into an issue, you make a
Mhm.
mistake, you hit a loss that you didn't expect, whatever the case is, you're going to go from 10 lots to two or one. And now you've got a loss that was made with 10 lots, and you're trying to make up that one loss with a one lot or a two lot.
Mhm.
And it just takes forever. You've just stripped your ability to compound, you've stripped your ability to even make up that loss in any kind of
Mhm.
efficient manner. It's a beginner mistake, quite frankly.
Mhm.
And it's
Yep.
one, that unfortunately all, way too many veteran traders make. Even me now, I'll see a trade. Okay, I haven't taken this trade. As I do my research. I'm constantly analyzing different approaches, different setups, different structures, et cetera, et cetera, et cetera. And one thing about diagonal spreads is you can never really count on the projection because volatility plays such a big role in the final outcome of the trade.
Mhm.
And so even now, I will look at a trade. I'm like, that is that that is a trade everyone should be taking, right? And so I'll take it, and I'm thinking to myself, there's no reason I
Why am
shouldn't
I not
just
loading the
Load
boat?
up the
right.
boat.
No reason I should not just load the
Do
boat,
this.
and then I'll back up and I'll say, no, Ryan.
Yeah. Oh yeah.
I've not traded this structure before. I've not watched it in any kind of long-term fashion. As much experience as I have in that, I know not to make that dumb mistake. Um, because I've made it when I thought I knew better. And I'm like, oh, Ryan, don't do that again. That's a stupid. You know better. Don't do it again. So I know if I'm doing it and I have that temptation and I know the stuff material like I do, I know everybody else has
So
that
you know where
temptation
it's
as well.
sunk in with me, Ryan, because I've done the same thing, man. And you know what sucks? Was the worst part of it is if you actually right. If you load the boat on something and then you're
Oh
right,
yeah.
and then you're thinking, oh man, this is easy, man, and then you get murdered if you try it again or something
Yep.
happens. But
Yep.
where it sunk in for me was not understanding really just as you were alluding to drawdowns earlier. You could be getting into the beginning of a drawdown. You could be starting a strategy when it's starting its drawdown.
Yes.
You don't know that.
Yep.
And you could be doing everything right. You could be executing perfectly. You could be
Exactly.
doing everything right. But just because that strategy is just in its drawdown or starting it, it's going to handicap you. So
Yeah.
that's where it stuck
Yeah.
in for me the last time it happened years ago. And I just keep it on the straight and narrow.
Yep.
So because
Yep.
I lost sleep over it. I'm not gonna lie. It's like, I did everything right yet. And then I started with this huge lot size, and just like you said, starts coming back up, but I'm only trading two lots now, three lots, and it's like, all right, man, it's
Yep.
taken forever to get back to where I was
Yep.
at.
Yep. We've
So
all
I
made
don't
those mistakes. So if you're
get it.
listening, whether you've not made the mistake, if you haven't made the mistake,
Don't.
don't.
Yeah.
And if you have made the mistake and you're like, should I do that? Let this be the affirmation that you should never do that.
Mhm.
Yeah. So, yeah. And you know what? What is also not good is if you start a strategy and you start with a 10 lot or a 15 lot or 20 lot or whatever, I got $1 million account, so I can do whatever, right? Your, your money buys you nothing, by the way, in the markets. Just saying. But they put on a 10 lot, 15 lot, 20 lot, and then it wins.
Mm.
And then they do it again and it wins again. And then they're like, oh man, I'm going to load
Dun,
the
dun,
boat.
dun.
Bam.
Yeah, it's almost
Yeah.
like the market is like playing they're playing possum poker with you, They're kind of like, oh yeah, here you go, bud. Hey, a little
Yeah.
bit more. Hey, go ahead,
Yeah.
one more time.
I tell you what, the markets eat ego
Yeah.
for
Yeah.
lunch.
Oh yeah.
It eats ego.
It absolutely
And
does.
yeah.
It also
Yeah.
feeds ego
If you
first.
guys can
It
believe it, I was way more egotistical when I was younger. Can you believe that? Yay.
Praise God you grew.
Right?
I don't know if we can
right,
handle you.
you're barely
Yeah.
yeah, I barely handle you right now.
My hair wasn't
Uh,
grayed out. It was just nicely smooth and black. Young buck.
yeah, that gray does something to you too. It's like, oh man,
It does. It does.
oh well.
I've embraced it. No hair coloring for me. I'm gonna age like fine wine.
There you go. Yeah,
I
I
saw
won't.
I saw a picture of you, uh, not Ben, but Ryan, recently. That was probably 10 years ago. And I did not recall that he had black hair before.
You
Like he
didn't
looks the same
recall.
to me today as I recall him looking 10 years ago. Oh,
How
Oh,
wait.
you
well,
like that?
nope.
Well,
Oh,
Yeah,
your
There it
background's
is.
are
hide your
there we
face.
go. There we
there
go.
you
How
There
you
it
like
is.
that?
Yeah, here you go.
Oh,
Let's
So
see.
Well,
Let's
that
see.
wasn't
who's
10
right
years
there up
ago.
front? No, who's right there up
Holy
front?
smokes.
Is
wait a
that
second.
me, the little
That's
one?
you. Yeah, here, we'll do
Aw,
this.
I'm so cute.
Hold on a second.
That is spring.
You kind of look like
Where
Superman.
is Spring? To your
I'm the
right?
littlest
No,
one there.
she's in front of me.
Is it
Oh,
my second
Oh, I'm
birthday?
sorry. That's me.
Oh.
yeah.
In
That's
case you
great.
were wondering. So
Oh,
yeah,
Ryan, you look like Superman. Did anyone tell you that?
Oh,
Superman,
Kid
Clark
Clark,
You
Kent,
look
Clark
huh?
like
Kent.
I don't know about
Superman.
that. That
Like
was a long time ago, guys.
That
So,
was when he couldn't grow facial hair.
Hmm.
okay, all right, all right.
It's true.
So what if I didn't have a single chest hair when my first daughter was born? All right, so
You did get
Smooth as a
three by the
seal.
time all of your kids were born. You
He
had
was
three children.
bodybuilding. He had to shave.
That
I
man
was
was
really young.
skinnier than a plank.
It's a
Seriously,
true
he would
story.
do weight gainer because he was so skinny. You bulked out
Yeah.
now, though. You look great.
Thanks.
Yeah.
Thanks. She's talking about my belly, but whatever.
We're talking about the guns,
A
man.
little bit of compounding.
Guns.
A little bit of compounding going on in there.
Exactly.
Compounding of flesh.
All right. Well, I'm sure we've bored these guys enough. So we should probably wrap it up.
Cool.
What do we offer? We're offering the workshop, super seasonals we talked about,
Yeah.
And
the money
fixed
management course. Anything else that are in those links? They're going to be in the links.
maybe a
Nope.
special Christmas one that you guys don't know about
Oh.
Did
I
we
don't
talk
even know
about the
about it now.
jams?
yet.
Are you talking about the jam
Oh,
sessions
we
yet or
didn't
no?
mention that.
Oh man, the jam. Well, we did mention the jam session because you
Well,
said
sort of.
January 14th. How sly of you.
Yeah. I was talking to some people on the team about what you're doing,
Yeah.
and they're like, "Oh, I didn't really realize that's what he was saying." I'm like, yeah, it's super valuable. I mean, it's when
It's
you
a,
want
yeah.
to get to kind of a pro-ish level, you're gonna want to know how to adjust.
Yeah. Yeah. So we'll end on this jam session, January 14th. Where I get that from is music, right? People come together and they just, let's just make some
Right.
good music and kind of see where it goes. And so they jam, right? So in the option world, there are so many different combinations, structures, expiration date, strikes. We can go four legs, so multiply all of that by four, and you get this, astronomical number of possible combinations. And so what I'm going to do is I'm going to take a certain number of structures, like option spreads. For example, an iron condor. We'll just
Yeah.
take something that everybody knows, and we're going to methodically go through all day, and it's going to blow your mind what we're going to do, but we're going to methodically change one piece of that structure and then analyze the change in the results. Then we're going to change another one, and then we're going to change another one, and then we're going to change another one. I'm going to be explaining, okay, why do you want to change this and not this? Why do you want to change this and not this? Why does changing this create such this one little thing create such a better structure? I'm going to be explaining all of that as we're going. So you're going to see how option spreads work in a way that probably no one has ever done it in the industry. And then, so at the end of the day, we'll probably have uncovered, I would say, 100 tradable option spreads, different structures, bullish, neutral, bearish. And we're going to catalog all of those. We're going to go in there. We're going to catalog all the ones that we say, okay, this is one I would absolutely trade. And I'm probably going to take a dozen trades that day. I'm going to go out of my mind. But probably take a dozen trades that day. but we're going to catalog it. We're gonna put the risk graph on there. We're gonna put the exact structure on there, and you're gonna have all of these as a PDF afterward. So a reference piece. It's gonna be phenomenal.
Yeah, it's really cool.
So that one's not available yet, though. We haven't made it to where anybody can sign up for that. So this is kind of a sneak preview. So yeah, thanks for bringing that up, Chad. And
You know,
spring
the
at the
best
beginning.
jam sessions have psychedelics, though, Ryan,
That's
in the
it.
past. So, I don't know if anyone's going to bring their optional psychedelic in there, but
No, no,
Hard no.
we're
Hard no. We are
we're
not
gonna we're gonna kind
promoting
of
that. Don't do it.
Ben's our local
we're gonna
comedian,
kind of
everybody.
steer away from that.
And now we're gonna have investigations into us.
No. Ben maybe, but not us.
Are they drug
What else is
peddlers?
new?
All right.
Anyways.
We should probably end this one. So probably the last one until after Christmas. So if we don't
Happy
see
holidays to all the viewers, and
you, we
Merry
don't see you
Christmas.
again. Absolutely. Merry Christmas. Be safe. Happy New Year. And spring is sporting the Christmas.
Oh yeah, what you got?
Yes.
All of you
Yeah.
non-festive Scrooges.
Whatever.
Right.
Oh,
I'm running
which
red.
one?
I
There's
count.
my red.
My
There's
Oh
my
right.
red.
my goodness. Where's your
Right
green?
there.
I almost wore a whole Grinch.
The Grinch head should have
I
done
chose
it.
not to.
Oh, you're not.
Oh,
Oh, that's cold.
he's funny. It's funny because I look like him.
Oh, whatever.
Yeah, I don't see it. I was
I
telling
don't
Spring
either.
that I don't
Quite
see
frankly,
it.
I don't see it.
I don't see it at all.
Well, I don't look
Yeah.
like my mother.
You kind of do. I was looking at a picture not long ago, and I'm like, oh, she does kind of look like
I said
her
she was
mom.
adopted.
She acts like it.
Yeah,
Whatever.
right.
She's
Hey,
Right,
actually
Chad
Ben,
knows.
hey,
We're the
Ben,
She's
same.
very
two
mean
peas
to
in a
me.
pod. Two peas in a
that?
pod.
Yeah.
Right? Yeah.
Yes.
Oh,
She's
Yes.
very mean to me.
You're mean to
Like,
me.
wow. Wow.
dang.
I'm just defending myself.
You gave
I'm
her
just
life
saying.
too, Ryan.
Right? Right? All
I
right.
think Ryan and I are brothers,
You have the
So-
matching hair. It works.
right?
Well, we do think a lot alike in the same
I
area,
know.
so
Genius,
yeah.
genius
Yeah.
travels
Yeah.
close.
The only
See,
problem,
there's that ego we're talking about.
What do you go? Oh,
and there is that competition thing. Like I could totally choke you out. Like
we need
that,
to do
right?
it. We
Ben
need to
is
do it.
very tall.
I know.
He is.
I
He
don't
is.
know.
Ben's a big boy. I would
Yeah.
have to, I'd have to pull out my secret. My secret.
Jiu-jitsu moves.
Yes. Yeah.
We'll record it, guys. Don't worry.
Oh my gosh. Podcast special. Ryan and Ben Jiu-Jitsu.
I'm gonna come up with a
No.
mysterious injury right before.
The visuals
Is it
are
your
running
groin?
through my head.
Yeah,
Oh,
yeah,
man.
yeah. I don't want to talk about that. Okay.
bone
Now
splitter?
now we really do need to
Okay,
end it
sorry.
because they're like, oh, these guys are nuts. Okay. All right, guys. Merry Christmas. Happy New Year. Be safe. We'll see you again soon.
Happy holidays, guys.
Take care. See you next year.